Welcome to Trading Lounge and the US indices for Friday, October 22nd. Starting with the Russell here, we've edged a little bit higher. We still don't have support on top of the 2300 area there, and that's what we're looking for in terms to help us confirm that the trend is on its way, so to speak. I mean, it certainly looks like it's on its way, and it's certainly in line with the other indices that are pushing higher as well. Let's just go in and have a closer look at this. So just from this wave 4 low here, we're building it to the upside. Now, there's a couple of things here that I need to chat about. I mean, this move that moved here, which came down, that it pulled back 61.8%, it pulled back rather sharp, so it does appear that we should look at it as a wave 2 rather than a wave 4. I mean, as a wave 1, we can look at 1, 2, 3, 4, and then 1, 2, 1, 2, 3, 4, 5, the third, fourth, and fifth here, and then look at all of that as wave 1 to the upside and coming back for wave 2 here. Or we're just going to have to keep building it as 1 and 2 and 1 and 2 here, and then 1 and 2. I'm not quite sure how this is going to play out, but whichever way it plays out, it's still just going to be reasonably quite sort of simple in a way. It'll just be at worst something like that. Do you know what I mean? So we'll just stay where we are. This low here shouldn't be breached, so that's a good place for stops. Alrighty, coming into the NASDAQ here, just on the 4-hour chart from the low here, we're looking at wave 1 and 2 and 1 and 2 here, and then 1, 2, 3, 4, 5 for the third wave, the fourth wave, and we're going up for the fifth wave here. We're at the midpoint here, the 500. That's going to be important over the next few sessions. So what we'll be looking for in that case, we'll be looking for support on this level in due course, and further upside. So no sort of problems here with all of this. Just dropping into the hourly chart here, we can see here we've got 1, 2, 3, 4 coming into 5 here, so it's probably 1 and 2 here, and 3 and 4 and 5. So we'll see though, just be mindful that we can just come up to the 500 and may even have a deeper correction here, so just keep the stop out of the way from this point just in case something goes wrong, but otherwise all good for this. Yeah, so a classic trading levels pattern on 500, that's what we'll be looking for. You know that we've got little 5 waves here. We're expecting Thursday to shore up and to Friday to sort of continue the trend, and through into Monday as well with a bullish weekly cycle. And do I need to go into the tick chart here? Why not? Because I think I need to remove wave 4 a little bit there on this one. Yeah, so wave 4 did drop a little bit lower, so there's nothing I can do about that. When the correction just expands, we thought that it would come back lower, and just we looked at going long above here, but just because it dropped down lower, then you can drop it down lower into this situation here. Do you know? But I'll put it back wherever it was up here. But just there's lessons in hindsight. So the point here to make is that we can see we've got 1 and 2 in here, and we've got the third wave here and the fourth here, and we've got 1 and 2 and 3 and 4 and 5. So we'll have a fourth here and a fifth coming up into this space here. So then we'll likely to have a move back to find support here before moving up higher. So we really just need to visually see that 500 as the support in due course. That's what you'd be it's kind of the next step, but just be mindful from that low to that high, a 50-60% retracement level at that point. Okay, let's have a look at the S&P. So with the S&P, I've dragged the third wave up here. I'm still not sure if that's right or not. We'll just sort of plod along with this because, as I mentioned before, the length of wave 1 here still leaves wave 3 short. So I think that we can move higher, and with a wave 4 we just expect it to break the trend channel, and it hasn't even done that. So but anyway, I'll keep doing some work on that, but just to let you sort of know that. I just think that we're going to be at the 5,000, you know, and the reason I think that for is a little bit weird, because I just know my numbers, and it doesn't, you know, it's all human nature. It doesn't matter if it's stock or a commodity or whatever it is. They get drawn to large numbers, and this is where this market is heading. So obviously there's things along the way. We're at 4.5 now, so the next level up here, there's a few of them, but the main important one is the 800, so 4,800. So that's going to see profit taking at that point. Or 8's always before a whole number, so that's partly, I guess, why it gets, you know, hit, because people think of 8 more so than 9, I guess, up that way. Yeah, but anyway, that's sort of there. So based on that, we've got this particular count here, looking at that degree of wave 4 and going up for this wave 3 here. So we'll keep an eye on all of this, and but at the same time, on the intraday charts that I'm looking at, I've got wave 4 over here. Okay, so I've still got that wave 4 there, so I just need to mull it over a little bit. It's okay to have 2 counts. They're both in the same direction, so it's not a biggie. Yeah, so let's just cruise in here. I mean, one of the things that sort of haunts me here a little bit that I haven't kind of figured out is that on the cash market, that's the low, this one here, and not that one. Because with this one here, we can look at this as 1 and 2 here, and 3 and 4, and going up for 5 here for this. But if that's the low on the cash market, then that's going to leave, it appears that this looks like 5 waves. If I can just show you on a cheap chart. So this is just a 5-minute chart on the SPX, the cash market, but here you can see 1, 2, 3, 4, 5 for 1 and 2 here, and then we'd have all of this as the 1 and 2 in here, and the 3rd and 4th, and so all of this is 1 and 2 here, and 3 here, and well, 4 here, maybe, yeah, 4 to there, and then 1, 2, 3, 4, and 5 here. So really from this low here, we've got up to that point, we've got 5 waves to that point off that low. So that means that if I can just point that out here for a moment, I think I might just go to the the hourly chart here for this one. I think it's worth just taking a little bit of time and understanding this point a bit. So on the cash market, if we use that as the low, from there, then we've got that move up through here for this. Now we've got this scenario here where we've got wave 1 here and ABC for wave 2, and then wave 1 and 2. So I wonder if we've actually got this as wave 1 here as well, and wave 2 here. That's what it would look like on the cash market. So if I just come back to that again for a moment, we've got 1, 2, 3, 4, and 5 here for 1 and 2. So all of that there, we could look at as 1 and 2. Then we've got 1, 2, 3, 4, 1 and 2, 1, 2, 3, 4, and 5. We've still got that finished here, but it needs to go up there further. But it does throw the counter around a little bit, and I just think that we need to be aware of that. I mean, we could probably even put this wave 3 there as blue wave 1 and 2 here, and then 3 here and 4 here. And the reason for that would be that normally wave 2 correction is simple and wave 4 is complex, but in this case we definitely got a larger complex wave in 2. It's large here compared to its relationship with wave 1 here. So to have a small wave 4 over here in blue, that's also a possibility as well. So just to let you know that yeah, there's just you know, the cash market has got a count coming in sort of left field, so to speak, from the futures market. So yeah, I'm not quite sure what we'll do about this one just yet. I mean, what I always find with these problems is that they sort themselves out a little bit further along the track, because we get to see more patterns, more price action, then we can say, oh no, that's not suited to that, but that's suited to that. So I just wanted to point it out, that's all. Okay, so it will be something that we'll work with a little bit later on with all of this. But apart from that, we've got this 1 and 2 in here, so there, and then we've got the third wave, all of the third wave here, fourth and fifth, to go up to this point. So this is slightly different from the NASDAQ. In this case here, we haven't reached this third wave. In the NASDAQ, we have reached that third wave. And this is the midpoint here, so we're going to need a midpoint over here for this, at the 50, at the 550. So what's occurred here at this 50 is kind of what we're going to see here as well, in a way. If that's the third wave here, then it's got the extension in it, then wave 1 here, and wave 5 will be roughly the same. So we can just look at that, you know, in that light there for a pullback. Now we may just pull back 61.8% and move up from that point, or we'll come back for this wave 4 and then move up at that point. So it's not a biggie. The thing is we're also looking for Friday and Monday to be bullish in our bullish weekly cycle. So we probably won't pull back in here as well for this. I think we'll just kind of move up. But yeah, we'll see. I'll know shortly how to count all of this here, but I'm just not quite sure yet. But what I can say to you with some confidence is that this trend is not finished. It's still got further to go up, and all the retracements in the trend have been very shallow. So we shouldn't see any deep pullbacks within all of this. And also too, I've counted it, just to let you know, I'm just coming back to the daily chart here. All of these counts in here, I've counted quite conservatively. In a way, we kind of got to imagine the market going up to 5,000. The only thing that can sort of flip us at this point, or where it could stop and reverse, is at the 800. That's, if it's going to fail, that's the number that it will fail on. But otherwise, we could see this, you know, somewhere way up here for this. If that's going to be the case, this this count that I've got here so far is very conservative, with a little 1 and 2 and 1 and 2 here. So yeah, so we may have to look at this in a different light, in terms of 1 and 2 here, so to speak, and 3 here and 4 here and 5 here, just to give you a bit of an idea that this count that we've got here may need changing. Okay, but that's just the way that I work. I always work from the bottom up, and I play a conservative game, and then I just keep building on what we've got, because to me it's all about managing the exposure. So yeah, it's okay giving targets, you know, a long way off. I don't mind doing that, but it's just how you get there, and you know, how you play it out. It's all in the detail. You know, you can be, you know, I think we've all done it. We've seen a whole bullish market move along, and somehow we've lost all our money in it. You know, I mean, it's crazy, but it's true. We've all done it. Oh, maybe not all, but I have. So whatever could possibly happen to a trader has happened to me. It's just a matter of time. Yeah. So anyway, just shooting the breeze. Alrighty. Enough waffling. Enjoy the weekend. Cheers.